Have you thought about doing one of those cash value life insurance things that you keep hearing about all over social media? Well, today I'm going to guide you on how much a max funded IUL should actually cost. And if you're new to the channel, welcome. My name is Mckensy. I've been in the financial services industry for almost a decade. I've helped educate thousands of clients and students, and I've even helped train hundreds of agents come into the industry. And today we'll talk about what is an IUL, using an IUL for its cash value, how much a max funded life insurance policy costs, some of the psychology and how it's different than other insurance products, and the importance of why you want to use a broker if you're going to purchase one. So let's get into it. And let's start with what is an IUL. Maybe you're coming into the party a little bit late. That's okay. Let's go ahead and break it down. It's 3 simple letters, so we're going to break down each one of those and help you to understand what it actually stands for. And the first one is going to be I for index. Now, indexed is different than what you would think about when you think about indexed mutual funds. So the way that it's different is that the investment strategy has some different parameters. It is a reflection of, if you will, the stock market or whatever it is that it's invested into. A lot of times the S&P 500 or different strategies. And basically what they do is they allow to not have the risk of going below zero. And in some cases, they cap the upside potential, but in a lot of cases, there is no cap on these strategies, which means that you're able to eliminate the downside risk of the market, losing money, and still be able to get a great rate of return. U stands for flexible, or at least you should think flexible. It doesn't really translate, but U is for universal, which means flexible, meaning that you can make changes to the policy. Unlike maybe a whole life policy, you can change the premium amount, you can make adjustments to the death benefit, you can change things inside of the policy once it's set in place, unlike some other permanent life insurance policies that you can't do that, where it would basically be set from the beginning, which allows it to be used for a lot of different scenarios, such as preparing for a kid to go to school, maybe to help supplement some retirement, to do succession or tax planning, or maybe even as a reward for some of your top employees. It being universal or flexible allows it to be used in a lot of different ways. And obviously the last one, L, means life insurance, in this particular case, permanent life insurance, meaning that it's going to be there no matter how long you live. So now let's get into why somebody would use a life insurance policy, an IUL, for cash value. Now, life insurance has its own code in the IRS handbook, 7702, which gives it some special tax benefits, much like a Roth, where it can grow tax-free, and the money that comes out of it is tax-free if it's used properly. So for those people who make too much money, around $150,000 a year as an individual or almost $250,000 a year as joint, they are able to use a life insurance policy for that growth like a Roth, whereas they are now disqualified from being able to use any of the Roth products because they simply make too much money. So oftentimes people who make great money will look at an IUL for its tax benefits. And talking about cash value, we've also got to understand compounding interest, or getting our investment to grow. And the I makes it very unique, that indexed strategy, in being able to grow a part of your portfolio in a manner that doesn't have risk. This gives you the option that when things are going sideways in some of your other investments, that you have something that's going to be a little bit more stable, meaning there's not risk built into the investment strategy. So if you also had a bunch of money in your 401k or an IRA, and you were using life insurance to help supplement some of that retirement, you could potentially use that while the stock market is down 20, 30, 40%. Why would you want to pull out your investments while they're down and you're going to take a loss on them if you could pull it from a more secure strategy at that particular time and allow your investments to come back for it to be better timing for you to be able to pull out from your investments? For example, let's say you had an IUL and you had your 401k coming into 2008, 2009. Your 401k takes a 40% hit, you have $100,000 here, and your IUL also takes a 40% hit and you have $100,000 here. Now, if you were to go into your account and you actually needed to sell some of those funds to fund something, well, then you're going to be looking at $60,000 here because it took a 40% loss in your 401k. Simultaneously, the $100,000 that's in your 401k is still valued at $100,000, and you could have hypothetically pull that $100,000 out and not have a loss on it. So it gives you the ability to adjust where you're pulling income or pulling funds from if you have the flexibility to be able to do both. The difference between the two is that your costs are not going to go into fees and administration as much as maybe a 401k, but it is going to have its own cost on the life insurance side. Remember the L, so there is cost for life insurance. So for somebody who maybe life insurance isn't important to them, it could not look as good necessarily because they don't really need that cost. But if you need the life insurance anyway, it might be something to look into. And now let's get into why we would max fund an IUL. And the reason for max funding an IUL is because there's really two different buckets that are happening inside of that particular policy. Part of it is life insurance, and part of it is going to be cash value. So let's just say in a hypothetical situation, we were putting $5 into this policy, $1 of it going into the cost of life insurance, and $4 going into the cash value, the investment strategy, and the indexed. Now, where people can get this wrong is if they are only putting $1 into the policy, meaning they're only paying for the cost of insurance, and they're not actually using the other benefits of the policy in growing the cash value. This obviously over time would lead to a situation where there was no cash value. It would almost be like buying a term policy, a term life insurance policy, and investing the difference, except for you never invest the difference. You would have the same issue where you have the life insurance, but you don't have any growth, you don't have any savings. So just like in that scenario, it's important to make sure that you're contributing to both. And maybe that doesn't make a lot of sense to you. So let's change the scenario into purchasing a car. And on one hand, you could purchase a Cadillac Escalade at $100,000, or you could purchase a Sonata at $25,000. Well, they're meant for different things. However, if you could hypothetically buy the Escalade, spend the $100,000 on it, and never put anybody in the back seat. Maybe you're the only one that's going to drive it and you never use it as an SUV. We would look at that and say, well, that wasn't really a good use of that investment. You spent way too much money for it and you spent way more in gas than you needed. It wasn't a very economical vehicle for driving around one person. That's kind of the same thing that happens with an IUL if you don't actually fund it. Now, if you were to buy the Sonata and you needed to seat 7 people, well, that's going to be a little bit of a challenge because they simply won't fit. Yes, you're going to save some money on the purchase of the car. It's going to save you a bunch in gas mileage. It's a lot less cheaper to drive and fill up with gas. However, if you need to seat 7 people, it's not very good at that. So making sure you get a policy that fits you correctly is really, really important. And if you're going to use the IUL, it needs to be max funded. You need to fill the vehicle, if you will, that if you're going to spend the money on the Escalade, make sure you fill it with people. Or if you're going to purchase an IUL, make sure you're actually using it for its cash value. Whereas if you just want some life insurance and maybe you're going to invest some money once in a while and you have a different plan for retirement, well, then maybe look at doing a term policy or a term for life policy, something that's specifically based on the insurance and it doesn't have the cash value extension to it. So here's where it's important to understand that the value can adjust. Obviously, if you need something that seats 4 or 5 people, it's going to be a different cost and a different vehicle class than if you need something that seats 7 people or 15 people. So unfortunately, there's not a dry, easy cut way of saying how much a max funded life insurance policy should cost you. Now, obviously, if you're younger, the cost of insurance is going to be less. You can probably save less money. So it could be a couple $100s, Whereas maybe you're a little bit older, you make more money, you want to put more money away, you could do it at a couple $1,000s a month. You can do that as well. I've also seen them big where people drop in hundreds of thousands of dollars a year. You can do that as well because it's completely customizable. If you remember, the U in IUL is it's universal, it's flexible. You can build it the way that you want it, and that's custom to how you're going to use it. And the reason why I wanted to throw in this second to last topic of understanding the psychology of an IUL versus other life insurance or other insurances is because it's very important to make sure that it's used correctly. One of the biggest challenges I see that people have, or why these policies can fail, is because people lose sight of it. They start thinking of an IUL as a normal insurance policy. And what do I mean by that? And it would be similar again to that person purchasing that Escalade, but then never using it for his family of 7 or 8. And instead of purchasing the Sonata, he's got this great vehicle, he's got the cash to put into it, he's got the availability, the family to put into it, however, decides not to. Sometimes that happens when people think about an IUL the way they think about all the other insurances. And what I mean by that is anytime that we're looking at our insurance, what's the number one thing that we want to do? I don't know about you, but for car insurance, for health insurance, for everything else, it's always based on price. And we would like to have the most coverage at the lowest price, or the amount of coverage that we need at the lowest price. It's why you go and you shop your car insurance every year or two and make sure you're getting the best rate. That doesn't really work. That thought process doesn't work with the IUL. The opposite needs to be true. The thought process, like an investment, needs to be, how much can I put in here? Can I max fund this thing to make sure that I'm getting the most benefit out of it? So whenever people are looking at that payment that's coming out or that premium that they're putting into a policy, if they're looking at it from a investment perspective, they're headed in the right direction. But over time, we forget about that. Over time, we go, man, why am I putting so much into my life insurance policy? I'm not going to be able to use this till I die. And they forget about all of the benefits of having a permanent life insurance policy. And if you're not entirely sure about all of those different benefits, make sure you check out some of these links above that talk about the different things that you can use a life insurance policy for and how to actually use a life insurance policy while you're still alive. And last but not least, we're going to come into the understanding of why it's important to purchase an IUL from a broker. And I know we have had way too many car analogies as it is, but I'm kind of a car guy, so I apologize. It's my go-to. It's how I can relate to everyday people because most people understand cars. So we're gonna do another one. And this would be that if you were going to go buy a car and you went to the auto mall, you're going to have a different selection than if you just went to a Chevy dealership. Meaning you could buy any brand, any size car, any style. You can compare similar cars amongst multiple brands. You can look at the difference in the warranties. You can look at all the differences on what they're willing to give you. One company might be giving rebates, another company might not. They might be overpriced at one and underpriced at another. And that's very similar to what happens with life insurance companies as well. Whereas if you just went to Chevy, you have to buy a Chevy, even if that car maybe doesn't fit you the best out of all the manufacturers, but that's all that Chevy can sell you. They can't sell you a different type of car. And that's exactly what happens with IULs as well, in that your age, your sex, your health, your weight, all of those things are factors. And it's important to be working with a broker because you can get a best fit for you. I've had top-rated companies decline somebody for being too skinny. And then we went with another carrier and they got top ratings. I've had another carrier decline somebody for being too overweight and then went with another carrier and got them a great rating there. So understanding that different companies are going to have different preferences and different strengths on the type of people that they want in their policies, not all of them are exactly the same. So you can get rated entirely differently between two different companies, which means the cost of insurance is entirely different between two companies. Even though it's the same person, same health, they can be rated entirely differently depending on what the company is looking at. So although this probably didn't answer all of your specific questions, I hope it gave you a better understanding of why it's important to use an IUL for cash value, and if you're going to do that, why you need to max fund it, and what can change the costs of a max funded IUL for you or anybody who's looking for one that you actually need, instead of buying something that's much bigger or too small, that it really needs to be customized to you. There is not a one size fits all when it comes to purchasing an IUL. So I hope this has helped you become more prepared for you purchasing one. And if you want to continue to become more financially literate, I highly recommend down below there's some links for you, whether you would like to receive a book or maybe get some more information about a book, or maybe you just like to be part of the community and get additional resources in your email. You can register for that down below. And before you go, please, if this was helpful for you, smash that like button, hit the subscribe, do all the YouTube-y stuff, hit the little bell. That way you can see when additional content comes out. And if you want to do better in your life, especially financially, then you're going to want to stay close and listen to additional content that's coming out from this channel. And as always, I hope you have a fantastic day, and I will catch you later. Bye.